Hey, what's up, YouTube? Eric here from MajorLeagueTrading.com, and I'm working from home today, but we're still going to crank out a quick YouTube video discussing a trade in NCLH. This was an options and a stock trade for an earnings event that just came out this morning pre-market. So let's take it over the screens. I'll show you guys why I put that trade on, what the risk was, and then how I managed out of that position accordingly. I'll see you guys there.
All right, so let's take a look at NCLH here, and we'll take it to the charts, and I'll show you guys what it was I was looking at yesterday in here. So as you can see, this is I put this position on about 15 minutes before the end of the day yesterday, and you can see this is the chart that I was basically looking at into the end of the day here, just the daily chart. And if we zoom out, you can see for the past few years, this stock's been kind of chucking along right around 55 bucks, give or take, a couple points one way or the other. And then the whole coronavirus situation hits, and the stock literally, I mean, cruises, you just can't go on a cruise. So the industry as a whole just kind of took a dump there. And this thing traded all the way down to $7.03. Now, I'm looking at this move and I'm seeing, like, okay, um, on the daily chart, like, yeah, it's got earnings coming up pre-market here. I'm long some CCL and I'm long some RCL already as well in my long-term portfolios. And what I see here on the daily chart is like this is a red bar through these kind of lows of support right in here around $10 and like 60 cents or so. And this stock has a 63-cent expected move based on the options market and based on what the platform's showing as the market maker expected move here. So when I see that, I'm like, okay, 60 cents here, the close $10.31. That pushes up at like 10.90 here. The high of this bar is 11.03. So we're like right in the wheelhouse of maybe getting above $11 here on NCLH. And if we can do that, then we just basically took all of these people that were trapped, or that sold all their longs yesterday under like 1060s, and we're going to get all those people that want to rebuy. At the same time, we're also going to trap all of the shorts that then decided to get short under 1060s here yesterday. And we've got the potential catalyst to make a nice move in NCLH and larger than expected move up towards like 1280s. So that's kind of what I'm seeing there when I take a look at the stock yesterday and I go, okay, how is it that I can take advantage of a potential upside move but still limit my downside exposure if it does want to go, to 820s, 840s, or back down here to $7, who knows, right? Because uh, earnings can do anything they want, right? The stock can come out with great numbers and it can still go down. The stock can come out with bad numbers and the stock goes higher, right? Earnings are completely their own animal. So when I trade them, I like to have a defined risk strategy. I'm not selling just straight, calls. I'm not selling straight puts or any of that stuff when it comes down to trading earnings here. I like to have that defined risk. So, anyways, in NCLH here, this is what I saw coming into today. So the way I wanted to play this was with a kind of pairs trade here, if you will, where I'm buying the stock and then I'm also buying the puts as protection. And basically, what that ends up doing is allowing me to have the upside to, if the stock wants to rally to 20 bucks, I've got all of the upside I can take advantage of with this move. Um, if the stock wants to go lower, then yes, I'm going to lose money on the stock, but I'm going to be protected because I'm long the puts. So it's a long, long situation, and that definitely kind of confused a few people. So hopefully this is going to start to clear it up for you guys. Um, looking here at the oops, looking here at the platform, you can see I've got up this active trader window here for the options, and I've got the options or the active trader window up here for the stock with a chart. And what I did is just went ahead and have the trades pop up here on the chart so you guys can see when I got in them, and then we'll fast forward and when I got out of them. I have not actually done the math on this position from entry to exit yet to really figure out what I ended up making. You can see P&L on the day here for the stock, $1,375. But again, I lost some money on the puts, so we'll go ahead and do the math on that as well. And the stock did move in after hours, so the P&L open P&L to the day is a little bit off as well. So we'll run through the math, show you guys the total risk on the trade, and then how it ended up working out. So I got along 2,500 shares here, basically $10.18. I got a little bit of a price improvement there. It looks like you can see my fills there, and I got long these 10 puts at 44 cents. So if we take a look at this, okay, $10.18 plus the 44 cents, my break even on this trade is going to be $10.62. Now, the reason my break even is $10.62 is if the stock rallies, right, 44 cents over $10.18, that's going to get me to my break even point. And the reason why is because at $10.62, these 10 puts go to zero, right? They're absolutely worthless. So the difference in my break even here of $10.62 and the strike of my put, which is $10, gives me my total risk on this trade. Now, I want to bring this over and just kind of show you guys something before we do that number. And this is a piece or a screenshot from the Major League Options course. And basically what it says is where most people confuse themselves with options is trying to figure out their break even on the stock as if they're going to exercise the option and hold it all the way until expiration. I've not exercised an option ever, and I don't really plan on doing so either. Now, the way that I have this set up and the way that I was planning on trading this is, okay, yes, my break even is $10.62 here if I'm holding this all the way until expiration, which is tomorrow. Today's Thursday, tomorrow being Friday, the May 15th options. Now, what I have here is $62 or 62 cents worth of risk per contract and per share. So we take that 62 cents times 2,500 shares that I'm long, and this gives me a total risk on this position if at all worst case scenario, the worst closing price for me on Friday for this stock would be $10 on the nose. I'm going to lose 18 cents on my stock, and I'm going to lose the 44 cents in premium I paid for those $10 puts. And I did this 25 times, 25 contracts, 2,500 shares. So we take the 62 cents and multiply that out, and that's what gives us our $1,550 worth of total risk on this position. Now, I didn't end up losing the total of $1,550 on this trade because the stock ended up rallying for me up here into higher prices, up over that $11 number. So what I was able to do is sell out the stock that I was long. And as I sold the stock that I was long, I went ahead and sold the puts that I was using as protection. And I didn't take a full loss on those either. You can see here, I lost basically 33 cents on those. So I got filled at a bunch. I got filled at all of them basically for 11 cents right there. 8, 6, 5, 5, 1. So how did these numbers end up working out? And we'll break those down in a second. But one of the things that I thought with this trade, and I actually kind of not mistakenly, but I didn't manage it properly. And the reason being is that if we go to a 5-minute chart here, this might look a little bit better. One of the things I was looking at here in this was, if I can take advantage of the earnings pop in the stock, right? And I can start selling my shares for over $10.62, right? Let's say I sell 1,000 shares over $10.62. Well, I basically just covered, those 10 puts that, I could have just kept, right? Because I paid 44 cents for those. Let's just take, out of the 25 that I have, let's just take 10 of those and 1,000 shares, and let's say I sell 1,000 shares at $10.62. That makes those 10 puts that I'm holding free, right? Because I was able to make money on the stock. Now, if I did that, and this is where I said I had a little, kind of didn't manage this properly, is my goal was to place some orders here, like I talked about in the free video last night, up over, kind of like 1060s or so, to take some profits on a quick earnings spike. And had I done that, I then would have been able to dump I would have had the opportunity to dump some of those 10 puts this morning when these things traded lower because they traded up to, 85, 90 cents up here on the highs. So I could have made some money on the stock to cover my 10 puts that I was long, and then potentially dump the puts if the stock wanted to go lower. Now, again, that didn't end up happening, so I had to hold on to the stock, and I held on to the puts as well. So the way this ends up working out here is I'm in here for an average of $10.18. I got out of 500 shares at $10.65. So $10.65 minus 10.18. So I made 47 cents on 500 shares, right? So we're going to go 0.47 on 500 shares. That's how much I was able to do on those. The next round here was an average sell of $10.81 minus the 10.18 that I paid for these is going to be 0.63 cents on 1,000 shares. And then last but not least up here, let's call it 1101. 1101 minus my 10.18 gives me an exit there for 83 cents on 1,000 shares. So if we do the math on that, this is going to be $830. This is going to be $630. And 50 times 47 should come out to, 500 shares. So $235. And we'll just double check the math on that. So 500 shares times the 47 cents that we made on that, right? $235. So grand total on the stock here plus the 630 plus the 830, grand total on the stock here is $1,695, right? Now, we have to look at the other side here of the puts, which I ended up losing 33 cents on those. So 25 times $33 is what I ended up losing there, which is $825. So minus $825 on that, and this will give me my grand total for this position, 1695 minus 825 here. Good on the day for this trade for $870 here in Norwegian Cruise Lines on the earnings trade. Now, again, it wasn't the home run that I'm potentially looking for. I'm risking $15.50 on this trade. I ended up making $870 on the trade. So not the greatest in terms of risk reward, but I also had similar trades this earnings season where I risked $1,000 and it paid, $4,000 and $5,000 and $6,000. So, which I actually didn't even end up having a losing earnings trade from a pre-market or post-market standpoint this earnings season at all, actually. So it was a really, really nice earnings season for us. But in this scenario, like, if the stock goes to, $12.80, we're looking at, on the next batch of this stock, if it ends up going there, that's an extra $1,800 here on just part of the position, right? If I don't get out up here on this because it spiked to 1114s in the after hours from earnings, if I don't get out up there, then I'm looking at potentially holding this up to 1280s. So while the risk reward is not necessarily picture perfect on this trade, it had the potential to be a really nice trade, and the risk reward was in our favor at the time. Now, just because it didn't work out, it did work out because we were able to manage the position and make a profit from it, but just because it didn't work out all the way to target doesn't mean that the risk reward wasn't there in the beginning. So I just wanted to clear that up with you guys as well. But anyways, that's going to wrap up this video here for the Norwegian Cruise Line's earnings trade, trading 2,500 shares of stock with 25 of the 10 puts, and how it is that I managed this position out to make $870, give or take a few pennies here on this position. Thank you guys so much for watching. If you guys want more information on the Major League Options course, like what I showed you there with the slideshow, there's going to be a link in the description below for that. As always, give me a thumbs up on this video if you enjoyed the content. Hit the subscribe button so you know when we post future content here on the channel. And if you have any questions, comments, all that stuff, leave them in the comment section below. Take care, hope it helps, and I'll see you guys on the next video.